Hello traders, Gary Wagner here. It is 12:15 in Honolulu, 6:15 in New York on Friday. Happy Aloha Friday, as we say on the islands. 22nd day of March 2024, and this is the evening report for gold and silver, our weekend review. Traders, after hitting an all-time record high of $2,225.30 earlier this week, it was followed by gold trading dramatically lower. Today, down $16.80. That's a decline of 0.77%, taking April gold to $2,166.50. But that is on the surface, because when we look at the dollar, you will see that it was dollar strength over the last couple of days that actually defined gold moving lower. When we look at dollar strength over the last 2 days, yesterday the dollar gained 0.60%, and today the dollar gained 0.49%, a total of 1.09 in terms of the net gain. Let's compare that to the decline in gold, with yesterday's decline coming in at 0.29% and today's 0.77%. In other words, gold's fall from grace after trading to its all-time high was really based on the dollar moving higher rather than sellers actively bidding the precious yellow metal lower. Nonetheless, because gold is paired against the dollar, dollar strength resulted in gold breaking back below $2,200 per ounce. That being said, I draw your attention to the current chart up on the screen. It is a 4-hour candlestick chart, the chart we've used all week to identify a bull flag. A bull flag is composed of a solid rally to the upside and then the market consolidating, moving sideways with a bias to the downside. And what we look for is either a break above this upper line of the flag, that is called a true bull flag, and then we look for higher pricing, or what is known as a failure, meaning that as it hit these lows, it broke below it. That certainly is not what happened. We did have a solid breakout. That's what took gold to its all-time record high here, and subsequently dollar strength moved it back lower. But the recovery today, if you look at the small green candle, is once again above this former resistance line created in the bull flag, which means that I still have hope and the belief that the bullish momentum we've seen recently in gold will continue with the wild card, which we've talked about over the last 2 weeks, is dollar strength, because dollar strength can erode any buying power if dollar strength is greater than the gains by market participants actively buying gold. And that's where we're at today. On a technical level, I still see strong support above $2,150 per ounce. I came to that conclusion based on the series of lows that generally followed this line I have at around $2,148 per ounce. I believe that that technical support will certainly hold. It is all about what the dollar does next week as to whether or not we will see gold return to its upward momentum, once again break above 2,200, and the new price to beat, the brass ring, so to speak, is this high that was achieved at 22, 25, and 30 cents. Silver was also hit with dollar strength. That was partially responsible for the strong decline yesterday. Silver lost 85 cents in trading. Today, it only gave up 3 cents in terms of the differential between the open and closing price. Currently, we have June silver at $25.07.5. That is above our stop. The low is also above our stop. So we know that dollar strength is playing a key role in the decline of the metals, especially over the last 2 days. In conclusion, the more neutral the dollar, or if we see dollar weakness next week, I believe we have an excellent opportunity to see both gold and silver move off of the recent decline and move to higher pricing. In terms of silver, I'm looking for it to take out $25.85 once again, with the top level in terms of the exit strategy and our current long silver position to be at about $26.50. The same is true for gold. If we have dollar neutrality next week, I would expect gold to once again challenge and trade above $2,200 per ounce. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.